Right now, something massive is happening in finance, bigger than Bitcoin ETFs, bigger than memecoins, and yes, bigger than the hype around AI-powered trading bots. It's the rise of tokenized real-world assets, or RWAs, and it's bringing trillions of dollars of value onto blockchains in a way we've never seen before. This isn't just about crypto anymore. We're talking about stocks, bonds, real estate, treasuries, all going on-chain. The line between Wall Street and Web3 is disappearing fast, and regulatory clarity is speeding things up. So, in today's video, we're breaking down which industries are making the jump into RWAs, which crypto projects are perfectly positioned to benefit, and how you can spot the next big wave before everyone else. And trust me, the numbers we're talking about could dwarf the entire DeFi market.
Let's start with the crypto-native players, exchanges. These are the first movers in the RWA boom. Coinbase. In January 2025, Jesse Pollak from Base said, "Every asset in the world will be on Base." Coinbase isn't just talking about its own stock, Coin. They're talking about every stock out there. In June, their legal chief, Paul Grewal, confirmed Coinbase is pushing to tokenize equities, making it a direct competitor to trading platforms like Robinhood. Robinhood filed a 42-page proposal with the SEC to create a framework for tokenized assets, making them legally equivalent to traditional assets. Robinhood's RWA exchange, RRE, will use Solana and Base to achieve insane speeds. 30,000 TPS and sub-10 microsecond matching latency. Kraken. The OG exchange plans to offer tokenized US stocks to non-US clients, launching X stocks on Solana, one-to-one backed by real shares. Already, firms like DeFi Development Corp are tokenizing their own equities on Kraken's X stocks. Analysts predict tokenized equities alone could be $1 trillion market in the next few years. We're also seeing smaller exchanges and startups building decentralized RWA marketplaces where everything from vintage cars to rare art is being fractionalized and traded on-chain. And don't forget, exchanges are also exploring tokenized derivatives and options contracts, bringing even more traditional finance instruments on-chain. Surprise, surprise, Wall Street isn't sleeping on RWAs. JPmorgan. In May 2025, they settled their first public blockchain transaction using tokenized treasuries on Ondo chain, bridged by Chainlink. They've launched JPMD, a 24/7 deposit token on Base, exclusive to institutions. It's interest-bearing and SEC compliant. Bank of America, exploring its own stablecoin, pending U.S. regulation. In talks with JPM, Citigroup, and Wells Fargo for a joint stablecoin. Megabanks predict tokenized RWAs could hit $30 trillion by 2030. That's 10x the entire crypto market today. Beyond the big names, dozens of regional banks and credit unions are quietly piloting RWA settlement for municipal bonds and structured finance. These aren't headline grabbers, but they represent billions in untapped market value. Also, don't overlook the role of banking-as-a-service platforms, who are enabling smaller fintech to offer tokenized savings products and lending collateral. The tech giants aren't far behind. Meta, after killing Libra/Diem, Meta is back, reportedly exploring stablecoin integrations, likely leveraging USDC and USDT instead of building their own. Walmart and Amazon, exploring stablecoins to cut payment processing costs. Same for Expedia, airlines, and others. Shopify, partnered with Coinbase to enable USDC payments on Base. Stablecoins alone could reach a $3.7 trillion market by 2030, according to U.S. Treasury projections. Tech giants aren't just looking at payments, they're also exploring loyalty programs and in-game assets as RWAs. Imagine your frequent flyer miles, or Fortinet skins, being traded on the open market as tokenized assets. And what happens when streaming giants like Netflix or Spotify tokenize their future subscription revenue as tradable bonds? Hedge funds and family offices are also testing tokenized venture capital funds, private debt, and even collectibles like wine and fine art. These niche markets could add hundreds of billions to the RWA space. Plus, pension funds and insurance companies are eyeing RWAs as a way to improve liquidity in historically illiquid asset classes. Big asset managers are getting in. Fidelity, tokenizing its treasury fund on Ethereum. BlackRock and Franklin Templeton, already tokenizing treasuries and money market funds. DTCC, Depository Trust and Clearing Corporation, launching AppChain, a blockchain platform for tokenized collateral. Real estate is arguably the fastest-growing RWA sector. Oaktree Capital, tokenized fractional shares of a multi-residential development in Canada on polymers. Vera Capital partnered with Blocksquare Ethereum to tokenize $1 billion worth of real estate. Dubai Land Department launched Pruco Mint on XRP Ledger, fractionalizing Dubai real estate. Their first property sold out in 2 minutes. Balcony, US, tokenizing $240 billion worth of New Jersey property deeds on Avalanche, calling it the largest blockchain deed initiative in US history. Some predict tokenized real estate could hit $4 trillion by 2035. Developers in Latin America and Southeast Asia are exploring RWA platforms to open up local real estate markets to international investors for the first time. We're talking about democratizing access to properties in cities like Sao Paulo, Manila, and Jakarta. Also, blockchain-powered property management platforms are starting to integrate smart contracts for rent collection, escrow.
So who wins?
Ethereum, the go-to chain for tokenized funds and stablecoins. Solana, leading in high-speed equities and exchange settlement. Base, Coinbase's L2, becoming a hub for institutional tokenization. XRP Ledger, expanding in real estate and payments. Avalanche, dominating property and private equity tokenization. Polygon, a favorite among DeFi protocols integrating RWAs. Ondo Chain and XDC, purpose-built for RWA tokenization. Each of these blockchains is building key infrastructure for the new financial system. Expect a positive feedback loop. Companies launch tokenized assets. Others follow to stay competitive. Capital floods into the cryptos powering these ecosystems. The result? A wave of growth that could rival the DeFi and NFT booms combined. Beyond the usual suspects, keep an eye on Cosmos, Near, and even Layer 1 newcomers like Berachain, who are building ecosystems optimized for asset tokenization.
The tokenization of real-world assets isn't a maybe anymore. It's happening. And the institutions, banks, and tech giants driving this change are some of the biggest forces in the global economy. If you want to find out which RWA cryptos we think could outperform in the coming years, check out this video right here. And if you enjoyed this deep dive, hit like and subscribe so you don't miss the next one. This is Guy signing off.